This is the WealthNet Market Call of the Week, highlighting investment trends that could affect your wealth. Globally aware with a geopolitical and quantitative perspective.
JP, how are you?
Good morning, Louis. Have a coffee this morning?
I got my coffee. No, it's not spiked.
It's not spiked?
No.
I was going to use my cup that says this could be bourbon, but I don't know if it was appropriate. But it would have been appropriate for this morning.
I know it. Well, you know what? But seriously, I know that it's early, but it's not looking good for Kanye, man. It's really not looking good. Or for Phil Collins.
Lots of votes to be counted still for Kanye. So that's good. So some of us may have been up late last night, and emotions may be running high. But I think this morning we're going to put that aside and maybe be a little more pragmatic, which I think is appropriate considering what's going on. So
absolutely. We talked about it last night. I said, JP, we don't talk about the election. And JP's like, yeah, no, let's not. But what we are going to talk about, JP, I have a challenge, actually. I have a challenge, and the challenge is what I've noticed is a lot of people, including myself, have been putting things off. So my challenge is what decisions are you not making? Are you putting off? What communications are you putting off? What actions are you putting off? And are those things keeping you from making progress? I think that's happening with a lot of people right now. And what can we focus on that is certain? So when we have times of uncertainty, what can we focus on that is certain? So, and I just want to rattle something off really fast if I can. So I have here a daily thought. So I journal every day. And I bumped up on something that I journaled on October 14th. And it was about trading. It was about investing. And it was all about focusing on what you can do, which is what you and I are doing. And, focusing on what we can do to make people, our investors, win, right? And this is some of the stuff that I had written about. The first one was, I put them all into I focus on, or I do this, right? But I focus on companies that have the potential to grow significantly. And I use volatility to my advantage, anticipating quiet movements that can turn into strong up moves. I don't listen to pessimistic people who say you can't win in the market, because there's a lot of people out there telling me that. I take partial profits on the way up, and I re-enter back into stocks when they tell me to, the good companies. I focus on the process of winning and executing, and I'm resilient when I have a temporary setback. So, and we've had recently just a small temporary setback, very minor, but having that resiliency, and I stay healthy to keep my body and mind sharp, and I have fun with what I'm doing. This is the kind of stuff I think that separates losers from winners, honestly.
Yeah.
And I'm not saying that's everything I'm just saying the thought process of what decisions do I need to make? What actions do I need to make? What am I putting off? What communications do I need to make right now? Who do I need to talk to? I don't know. That's just the thought of the day. What are your thoughts on that?
I agree with the pragmatic approach that you just outlined, right? What can we control, and the amount of things that we control today, is it different than yesterday, right? I mean, that's the way it is. Like, putting emotions aside this morning, you're like, this is another day, and we know what we know. Do we know less? I mean, I've been saying several times that the market was going to react positively to a reduction in uncertainty. Now the market surprised me a tiny bit this morning. I'm like, I don't know that we lifted a ton of uncertainty yet. Yet the market is certainly showing us that something else. Like it's definitely lifting. Like we're up 4% on the Nasdaq, 3% on the. That's a huge move this morning. That we're seeing, and clearly that's like, okay, we're getting some indication. How do we react to it? Like this morning, I actually got giddy looking at the market and looking at some of the stocks that I've been keeping an eye on, and be able to act on it, right? Following all of these criteria that you outlined. Those have not changed. This is what I was doing yesterday. I was looking at our scoring model and going through companies and say, okay, which ones look good and why, and having that buy list ready. That's what I controlled yesterday, right? Whatever you did, and said, okay, this morning is another day. I've got these stocks, and there's a couple that that I feel ready to add to our portfolio. So, and I'm actually, very actually excited about what's going on this morning. There's some themes that are emerging. Now, I won't rebalance the whole portfolio today based on what's going on, because that could change on a dime. But we're seeing some interesting things this morning. So I agree. I think that's what we need to be doing. You've been looking at the macro or the market as a whole. What are you seeing right now that maybe is is poised to be a sustainable move in some areas? What are you seeing?
Well, I still think that the stocks that have the ability to grow regardless of some of the macro issues are really where it's at. And if you notice today, the Nasdaq early on, which have more companies that have some products that are in a growth phase, that was the first thing to really take off, right? I mean, you really saw that kind of a move because there was a concern. I think people are saying, look, these are going to be the growth companies, and the state of the economy, the energy stocks, and the other industrials, stuff like that, little less knowable. But I think those special type situations are still where the money is going to be made in this market. And if you want to go more high level, I do think that the emerging markets have been, all of our technical models are saying emerging markets need to be invested in. And I still, you're seeing moves in kind of alternatives as well. The Bitcoin move and all of that. But I really think that the real key to this environment is to focus in on the bottom up areas that are poised to move well regardless. And to the macro, I think, is something that we need to be cognizant of in terms of, is the market healthy? And I think the market is acting extremely healthy given all the monkey business that's going on.
It is, and it's. I got a text this morning from a friend to that point saying, "What's going on with the market? Why is it like it did not understand what was going on?" And again, that there's a general, I think, view of that disconnect again between Wall Street and Main Street, and it's easy to fall into that. But let's look further. I mean, earnings in general are still looking great. Like this morning, another sector, right? You talked about the tech and communication services are doing well, and that tells us a little bit about more of a risk-off or less cyclical stuff this morning, like steady growth, is being valued this morning. But also we're seeing healthcare, right? Definitely the leading sector today, maybe in reaction to some of the leadership right now. But it seems to be more than a sucker move right now, because you have actual real companies. You have Biogen, for example, up 40% today. This is not just a reaction to polls here. This is, good positive things. Things like maybe United Health is really more some of that lift from the overhang of the election over it. But some of the pharmaceutical and biotechs are looking fantastic this morning, and we've been talking about that for a while.
Yeah, that is an area that you must be a part of. Yeah. I think in this environment, the challenge there is the idiosyncratic risk due to high risk outcomes. Mm-hmm. And so either you take small position sizes and go broad, which is the approach I think makes sense in a lot of the biotechs, younger ones in particular, or you just buy the more knowable ones. And so it is a little bit more of a difficult play, but I do think that is the future. The thing is that let's see, how can I put this? So I had a call yesterday with a potential new investor, and it was in a portfolio that had a bunch of your traditional high dividend paying stocks, your Pfizer's, some of the high yielding energy stocks, the kind of portfolio that I remember I've been seeing for years, right? And it's on everybody's buy list as an equity incomes, quote unquote, portfolio. And that portfolio is severely underperforming. And then when you lift underneath the hood, you realize that you cannot invest in the old economy all the time the way you used to. There's a lot of managers that still want to live in the past, to be honest with you. And I don't think you can do that because we have such a huge shift. And some of the traditional value stocks will be value traps, like you like to call it. And so you have to put some growth in there and have a total return approach, especially if you're generating income. And the other thing that's been on my radar is fixed income, looking at the fixed income markets. And with the credit spreads so tight, you really are not getting paid enough on a lot of these corporate bonds. You just aren't. If you get a under 6% yield in a high yield bond investment, it's just not worth it. So to me, it's like you got to be kind of bifurcated or straddling between safe protection of your portfolio with some income capability, mostly treasury type investments, and then some diversification in international bonds. I think that makes sense because of the changes in the dollar. I think it makes sense to have some international bonds there. Your income is going to be a little bit less there, but you're going to have some diversification effects with the dollar. And then I think you can pepper a little bit with some of the emerging market, more aggressive income type of bonds like emerging markets and junk bonds and stuff like that. But you don't want to get too crazy with those in this environment, in my opinion. The credit spreads are so tight, and defaults could continue to increase. But so the fixed income market, I think, is probably the toughest area right now. In terms of equities, I think we really need to focus primarily on those special opportunities there. I'm sorry, I kind of went.
No. And I agree with all that. Fixed income has been a puzzle. We've maintained a what I believe is a very conservative stance, just mostly for lack of opportunities, like you mentioned. I mean, and today, in conjunction with this market pop on the upside, we also seeing the yields dropping to multi-month low. So we have a double whammy. So what you're saying is that maybe the asset allocation that I'm still call it cheating, or we should be erring on the more aggressive side, like maybe maintaining higher equity exposure than maybe traditional
We have
rule
to.
of thumb would tell us right now in order to maintain this growth. I mean, I was allocating some 529 college funds and this week, and I realized you have to really go up that those traditional glide path that they give you to target dates. Get too conservative too fast, like you're not going to get there, right? So when you think about mapping to objectives, you have to look at it from a total return perspective, and that's that's definitely something that's actionable that you have to be we have to keep a close eye on, and it takes that mental fortitude to accept that maybe higher risk level. And by risk, I just mean potentially some volatility, even though we can control that. But something you said, and I want to circle back and ask for your thoughts, is I went through maybe 200 stocks yesterday, just sifting through and said, okay, what's looking good? And I was shocked. Everything that looked remotely good is in the small area. We talked about this weeks ago for weeks. They're small companies. They're companies with products that are growing, that have potentials. This is what's looking good right now. Like I honestly, big tech is less than exciting to me right now. But we maintain some exposure there. But honestly, the opportunities and what I'm really excited about right now are smaller companies across industries, whether it's in solar, whether it's in even energy, that
Yes.
but like very very specific, very narrow um, application, like service industry that I've
It's the future. It's where the future lies, because we're in the midst of this dramatic Schumpeterian creative destruction phase right now that is such a great opportunity for investors. I mean, to me, I get so excited with this stuff because, being a kind of a market historian like you are too, whenever you see these types of things, you realize there's tons of money that can be made in this.
Mhm.
And so to me, it's exciting. And we cannot be fearful in this environment. That's the thing.
Yeah, I mean that's what it is, and I surprised myself this morning. I thought I'd wake up a little mopey, but no, I started. I turned on the ticker machine, and I'm like, wow, this is just fun. And I started looking at stocks, and couldn't wait to to put these things to work and to start diving in. So, like you said, like maybe this is counterintuitive this morning, as an attitude, but um, that's how we feel, and and the future again is probably bright, regardless of some of the things that we may feel strongly about. um,
Well, we have to put ourselves in a position to win, and we need
exactly.
to put our clients in a position to win the best that we know how, using the best research we can find that we have capabilities in, and we have significant capabilities in doing that. And then we just manage risk along the way. And I think that's the real key. So you mentioned something about opportunities, and um, somebody that I was talking to mentioned, I mentioned Alibaba, which is one that we've had a big run up in, and recently has been taking it on the chin, right? It's kind of selling off from a big rally. I mentioned Alibaba, and this particular person said, "Isn't that a super expensive stock?" And I said, "Yes, it is." And it was so cool to hear somebody who is an individual investor talk about valuation. And I brought up the concept of the QVT, which we keep coming back to. That's such a powerful concept. It's so simple and powerful that I think it's just always guides what we're doing. And in the long run, so what we're in a situation with right now is that the quality factor, which is the ability to withstand economic turmoil, strong balance sheet, those types of things, consistent business, that factor is struggling with the growth / technical aspect, which is creating new Schumpeterian innovation, and I think that is what is throwing people off right now, investors, because they're so used to focusing in on the value metrics are super important. They got to grow into the value, so you don't want to just chase just to chase. But when I look at the portfolio, I see that we have a nice blend, and I think that's really the key. Where you just got to put yourself in a position to win and manage your risk, and be aware that that there's always going to be something around the corner that you don't expect, but you just got to use your process to manage the risk. So
Yeah, no, I agree with all that. So I don't want to repeat everything, but it's that risk management, right? I mean, again, this morning I'm looking at a relatively pretty, you would say, high flying biotech company to add to our position. Um, and it sizes up as a very small nominal amount, like 1.25%, which again, it's appropriate for its level of risk right now. And if it pays off, then we'll add to it. So, and if it doesn't work out, then we'll get out. It's again, it's that process to be able to add opportunities to your to your portfolios that come from different places. But you mentioned the QVT. I sliced and diced that thing yesterday every which way. I looked at top quality companies, top value companies, top technical companies, and just see, okay, what's going on and which companies are working. And I sliced and diced that. And then we have some other more discretionary ideas that, some of the things that I've, looked at, where we all get ideas every day from different places and different sources. And sometimes those are things that may not pass a quantitative screen, but you look at those ideas and like, what's going on? And they have a room in your portfolio, as as more of that, kind of innovative, what you would say as riskier area. So So yeah, so very, very excited about that in general, and hopefully deploying capital in what's going to lead us in the next step.
Yes. Well, that sounds good. So, well, we're about to wrap this up here. We're starting to run out of time, but I think that we're on the right track. I would just also bring that back up again. What decisions, communications, actions have you been putting off? That's the challenge. And the reason why I bring up a challenge is because I think we all need to be challenged right now to get out of our bubbles. I mean, that's what I'm seeing is a lot of bubbles out there, including myself. And it's so easy to fall into that. And to open our minds and start taking actions right now. And you know what? We're going to look back on this craziness right now. We're going to go, it's going to be behind us. And we really need to, the quicker we can get this stuff behind us, the better off we're going to be.
Yeah. And well, those are great parting words. Hopefully we can keep having that discussion, very constructive discussion. And I just hope nobody just jumped out of the market, because this is exactly what we talked about, the fear.
Yeah.
The market is up 4% today. If you're not in, you'll be left behind, and it's going to be very hard to catch up, right?
Hey, it's nice to be able to call it, right? Because we definitely called it. Because I said, yeah, we're gonna have some big quick downs, and then and the market's gonna overreact. And I think that's what's happening right now. We have not had official breakouts in some of the indexes, but they're very, very close. And individual stocks are breaking out. Because I keep levels of individual companies at certain resistance points, and this morning they were all lighting up. So, the leaderships are starting to break out of the resistance points, and the market hasn't quite caught up to that yet, but it's happening.
Yeah, and that idiosyncratic, behavior is what we want as stock pickers. We're going to take advantage of it. So,
yeah. Hey, JP, good to see you, buddy. Prost. And
Prost.
We're going to have a great holiday season too. I'm looking forward to that. I'm looking forward to all the lights and the festivities.
I am too. I think everybody is. So let's trade the pumpkin for the Christmas tree or the
Hanukkah lights or whatever. Yeah, but we have to get the turkey out first. So
yeah, absolutely.
let's not forget the turkey.
Yeah, I know. I love. Everybody knows I'm a good cook, so that's one of my favorite days of the year. So I look forward to it.
Yeah. Thanks a lot, JP.
Thanks, Lou.
We'll talk to you later.
Bye.
Bye.
The market calls are designed for informational purposes and should not be considered investment advice. As always, do your homework, assess the risk, and invest in light of your personal goals. If you like this information, be sure to subscribe and follow us on Twitter and Facebook.